You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is time once again for TWIFO, This Week in Futures Options. The name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What's going to make it onto the show each week? You got to tune in every week. Last week we went crazy. We got PTSD in the ags last week with Carly Gunn. I got a feeling we're going to get a little bit of whiplash out there in the energy sector this week. So again, that's what makes this show so fascinating. You got to tune in every week, listeners, to see what's lighting up the tape. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging these days. If you like what you hear, throw some stars or a rating or a comment or a like, whatever your platform lets you do. All that stuff does help new people continue to discover the content, and clearly there are new people discovering the world of options all the time. They need a place to turn. Help them find a place to TWIFO and indeed to the rest of the network. You already downloaded, you already listening to the show, you already cost me some bandwidth. Pay it forward with a little bit of the old likes and all that fun, the ratings, the reviews. And of course, if you want even more fun in your life, and who doesn't, let's say you don't want your broadcast week to end with volatility views tomorrow, you want to come back for options oddities, you want to get great pro Q&As like we had this week with Jim Carroll, Mr. Vixologist himself, talking all things vol, then theoptionsinsider.com/pro is the place to go to learn more. As we go around the horn, see who's joining us on the old CME hot seat today, I am pleased to welcome back our old friend, Mr. Russell Rhoads, holding down the fort at the Kelley School of Business. He's also the author of one or two or half a dozen options and volatility-oriented tomes, but we call him around here the once future and now present. He has the paper. So, and now present, Dr. Vix. Mr. Rhoads, welcome back to the show, sir.
I have the paper. It's funny. We were joking around about the paper, and I posted a picture of it. And you just got to love the Twitter or the Xer or whatever we're calling it now.
Yeah, Xer.
Because somebody was shocked and appalled that I had to prove that I had finished it. They didn't realize it was kind of a joke, but It was a kind of a joke.
They have
what kind of person is making you prove that you got that thing?
They obviously have not been listening to the network.
Nobody is making me do anything I don't want to do.
We had your best friend in the futures options world, Carly Garner, on the show last week. She said horrible things about you, so you have to return the favor this week.
We have never met. And we exchange messages and stuff, and God knows I've been out to Vegas a few times where she hangs her hat, as you put it. Maybe we're the same person because we've never been in the same room.
There you go. I have never seen the two of you in the same room together. She does tell me whenever you come to Vegas, she does kind of try to dodge you. So maybe there's a little bit of that.
I've figured that one out already. So every time I'm not going to be. I've got to go do something somewhere else. I'm not going to be there, but enjoy yourself. So
we will be moving on, though, into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the movers and shakers report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME since our last show. And it's another week, listeners, where we are almost exactly evenly split. It's kind of another weird one. You know, for a while there, we were seeing very biased markets in one direction or the other. A whole bunch of green, a whole bunch of red, made it difficult to put together a bottom or top five some weeks. These days, not a challenge at all. We got an abundance of riches in both directions. So, Mr. Rhoads, the door is open. The floor is yours. Which way should we begin this week, sir?
Door is open. Let's go light and then dark.
Yes, that is how the show goes. Glad to see you.
Light and then dark.
Glad to see you're catching on after how many appearances, sir. So how this segment works. All right, to the light side we go, listeners, and hopefully you're in the mood for a little bit of energy, because we got some for you this week, except for number 5. Number 5, those little sectors continue to sneak their way in from the S&P. CME listing those E-mini S&P sector futures and getting some volume on those. No options yet because they're not quite blowing the doors off, but they are starting to light up our movers and shakers, which is interesting. This week, number 5 to the light side is the communications sector. So intriguing stuff, up 3.94%. And number 4, it's all energy the rest of the way, listeners. Number 4, we got Brent up a little over 4, about 4.13%. Number 3, it's RBOB up 5.41%. Again, before you ask about either of those, you know the deal by now. Not a lot of options paper to really parse there, even though RBOB has got a little bit more to speak of. Number 2, one of our old friends, it's WTI up 5.43%. And number 1 this week is heating oil up 7.59%. Again, same deal there. Not exactly blowing the doors off out there on the heating oil from a volume perspective. So we don't usually add it to the rotation, but you could see the breadth of the energy lighting up the light side this week, pun intended. Now to the dark side we go, listeners. Number 5, off to the metals we go. It is platinum off a little over 2, about 2.05%. Number 4, right behind it, still hanging out in the metals, it is silver off 2.65%. Number 3, it is palladium off a little over 4.02% to be precise. Number 2, one of our frequent offenders, it is back. We haven't seen it in a while, listeners. It is lumber off 4.77%. It was number 3 last week, off a little over 5%. So that's 2 weeks in a row now we've seen lumber back. I was starting to wonder whether we needed to take it off our frequent offenders list because it just wasn't making the list much anymore the last few months. But here it is, back 2 weeks in a row. I guess dead trees back on the menu, listeners, or at least from a vol perspective. And then number 1 to the dark side this week, one of our other frequent offenders, it is nat gas off 5.53%. It was number 4 in the other direction last week, up 7.75%, so giving a good chunk of that back this week. So as you could see, almost the entirety of the light side and one of the dark side is dominated by energy. So I think we have to start there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go. You know where you have to go, cmegroup.com/TWIFO. Once you're there, go into that drop down. It is an alpha order list. Listeners, you're going to go down 3 slots to energy. And then where we start from there is anyone's guess. Mr. Rhoads, like I said, we had your buddy Miss Garner on the show last week, and she mentioned she was getting PTSD from all the moves in ags, so she had dropped back. We're getting a little bit of whiplash this week in energy. We got light side, we got dark side, we got movers, we got shakers, we got a lot of stuff going on. Where do you want to start in the energy sector this week, sir?
Heating oil doesn't trade a lot of options, right?
It really does not. If you want to go in there, we can.
Well, then let's go to number 2 in WTI. I didn't want to take you to a place where there was.
You have been known to take me to products that do 8 contracts in the past. So yes, I do expect it from you now. All right, sir. A lot going on in the world of WTI as we're kicking off the show. Threatening the 80 handle. I think it got north of it earlier this week, and then of course a little bit of a sell off yesterday post Fed, but still looking rocking and rolling up 3.3% on the week. Of course, you go back to the end of our show last week, it's up about 5.5%. Again, threatening that 80 handle. Starting to see the effects of those production cuts coming out of Russia and Saudi Arabia. Also some talk out of China about trying to bolster their demand there. So all of that combining for a little bit of a 1-2 punch. We had a little bit of a downside move again post-Fed. That's to be expected with high rates, but still not enough to curtail the bull this week out there in WTI. Mr. Rhoads, a lot cooking in Atlanta. WTI was catching your eye out there, sir.
Just, bordering on that 80 level. I was looking around for a few option trades that maybe tried to fade that, and we don't see too many of them, but you also don't see going back. You don't see anybody speculating that it was going to break 80. So it's one of those cool things you can do with the option market is see where some of the activity is when we're approaching significant levels. If you saw some call buying with strikes above 80, you might have thought, hey, it's going to break through there, but didn't quite do that. It stuck its head up and got shot down very quickly. So it's just kind of just not a whole lot of call activity when we are testing that resistance level. And we've seen both sides of that since I've been showing up on this program with you, where sometimes we approach a support or a resistance level and you see an awful lot of option activity that would indicate that we're going to keep going in that direction. You didn't get that feel from the oil option market this past week.
And no, now that VIX is getting kind of anemic, outside of today, it looks like we killed the market on option block. Listen, we were talking about maybe we might turn red, and then lo and behold, we are selling off now. So you can blame Henry, our buddy, Mr. Flowmaster, for coming back from vacation and killing the market. While he was gone, Mr. Rhoads, the market did nothing but rally. The second he touched his foot on U.S. soil again, market just falling out of bed today. But intriguing stuff. Maybe we'll get there a little bit later. But now that vol in the equity space looking a little bit more anemic, maybe today notwithstanding, catching a little bit of a bid out there today. Have you found yourself looking a little bit farther afield for places for a little bit of volatility, like, say, perhaps the energy sector, Mr. Rhoads?
Oh, gosh, absolutely. Absolutely. And also where I had been looking for volatility, and it's something that I didn't even know we could talk about on this program, is those the sectors. Yeah, that communication sector future.
Have you been trading those?
I've actually just started doing like relative sector analysis because you see really nice divergences among those, and it's easier to trade them with the futures than the ETP sometimes or the ETF sometimes. So I've been looking at individual sectors. Yeah, I've been looking it totally off track with this program, but we got earnings. So we've had kind of a mixed thing there. But yeah, looking within the commodity space for something that looks like it's going to break in one direction or another. That's exactly what I was doing. That's exactly why I just made the comments I did about looking at crude, because I was looking at crude oil earlier this week, and I was like, is anybody think it's going to break out? Maybe I should be going counter to the crowd, but the crowd doesn't think that 80 level is tough. It really hasn't been surpassed in almost 10 months. So it's going to probably continue to hold there. But if anything, I guess I'd be fading volatility on WTI after a couple of weeks of fun here.
Couple of weeks of fun indeed. Let's break down this week of fun, listeners. Like we said, a pretty decent week, right around the volume level you would expect, around 433,000 contracts. I expect 440, 450, somewhere around that level by this time of the week, listener. That's pretty much what we're getting out there. So not an explosive week, not over 1 million contracts, but also not a couple 100,000 either. In terms of paper, 41% of that going up in the SEP contract. It has about 21 days to go, so we're going to hang out there. The vol 28 and about a quarter, off nearly 2 points, about a 1.85 points. So coming in a little bit. We were north of 30 on the show last week. Now that's starting to come in a little bit. Still obviously juicy, still roughly 2x what we're seeing out there in VIX land right now. So if you're looking for a little bit of juice, you could do worse than the energy complex right now. When we get to nat gas a little bit later, you're going to see a little bit more juice out there. In terms of skew, last week it was all about the puts, 5.6% rich in September. This week there's still kind of bid, about 4.5% bid. So again, maybe speaking to what Russell's talking about with some folks not having all the enthusiasm that they're going to be able to break or maintain that 80 level out there. The calls last week, interestingly enough, nobody wanted them. 3.9% cheap. Probably some of that leading into the Fed week. You know, their higher rates, usually not strong for energy demand. So maybe some of that feeding in. And that's still the case this week, about 4.4% cheap. So the calls getting a little bit cheaper. In terms of action, though, it was the 85 strike calls in September that were leading the dance this week with about 17,300 contracts. Interestingly enough, you're talking about people not thinking this is going to have some legs north of the 80 handle, Mr. Rhoads. Seemed like they might have earlier this week because we saw a lot of opening paper earlier in the week, 3,500 on Monday, 2,800 on Tuesday. So opening earlier in the week, and then they kind of bailed later in the week. 4,000 on Wednesday, closing 7,000 today. So it seemed like 85, maybe they were looking a little optimistic earlier in the week, Mr. Rhoads, and then they got the hell out of Dodge. Is that your takeaway as well?
Listen to how you're explaining it. Absolutely. That's likely what happened was we got close. We failed a bit. We're testing it again today, and we're kind of failing again today as well.
Weirdly enough, folks bailing on the 80s pretty much all week long. Almost 14,000 of those trading this week. So they're the number 2 most active contract, which again is actually, I take it back. You know what? There were actually some 85s also going up out here in October that were actually pretty active as well, doing nearly 18,000. So actually, I take it back. These are the most active contract of the week. So 85s looking pretty active. And again, opening earlier in the week, nearly 5,000 on Monday, 2,300 on Tuesday, 6,000 going up on Wednesday, mostly closing 4,800 today. So it's same pattern. Opening earlier in the week, closing later in the week. If it was reversed, maybe then I might expect this was a little bit of a roll. But it's interesting. Similar flow, similar strike. But doesn't seem like it was rolling paper, but we've seen weirder things out there. Back to September now, listeners, and we have the 80 calls. That's kind of what I expected to be lighting up the tape this week. Nearly 14,000 of those, and as I was saying earlier, closing almost all week long. So folks bailing on the 80s from the jump. 4,800 on Monday, closing 2,200 on Tuesday, closing 3,200 on Wednesday, closing 3,400 today. So interestingly, as we kind of threatened and broke through briefly that we didn't see maybe more opening early, kind of like we saw the 85s, opening earlier in the week and then maybe bailing post-Fed. That would have made more sense, but not what we saw out there. And then if you want some put action, we got some for you. It's the September 75 puts going up 11,000 times this week and change. The big days, Monday and today, both about 3,900 contracts. Obviously, we don't know what's going on today, but Monday was opening 2,000 on Wednesday and about 1,400 on Tuesday. It's like opening pretty much all week long. So maybe as we headed towards the Fed and coming out of it, folks piling into a few of those puts. That would explain why that put skew is still relatively bid out there. And again, hanging at this 80 strike. Can we maintain it? As Mr. Rhoads alludes to, it has been challenging in the past. So maybe some of that past is prologue feeding in here. If you want a little bit of near-dated paper, going away tomorrow, listeners, we have the 80 calls. Those were trading pretty actively all week long, as you might expect. About 8,000 going up, even though almost half of that, 3,700 going up today. So a lot with 1 day to go. That's interesting. 2,400 yesterday, 1,700 on Tuesday, and a couple of hundred on Monday. So opening throughout the week, but the lion's share going up today. So interesting. Maybe a little bit of a 1 day. We just ticked over the 80 handle, 80.01 now. So that's pretty much a binary at this point, listeners. 1 day to go, 80 calls. We're going to stay north of it. You going to vote yes or no? Some folks are doing that right now on the 80 calls going away tomorrow. Let's scroll around really quickly. Usually some interesting and or aberrant paper a little bit farther out. How about if we go out to Dece of 2024, listeners? We got a couple of thousand, about 2,500 of the 60 puts going up. 1,100 on Tuesday, and the rest like 500 each going up throughout the week. Kind of opening and closing, so weird kind of back and forth paper on the 60 puts in December of 2024. We've seen weirder things, and also 2,200 of the 72 half puts. Now, before you think there's a roll there, there's not. They're just going up different days, 1,100 each a day. So weird stuff afoot there on the downside in D. So you like that? 60 puts by 2024, listeners, December of 2024. Intriguing stuff. Mr. Rhoads, anything else catching your eye in crude oil, or should we move on to our other frequent offender in the energy complex, which is nat gas, sir?
Well, I did see a big purchase of the D62 puts as well, which kind of goes along with what you just said. But otherwise, let us move forward.
All right, listeners, let us move. By the way, if you were intrigued, Mr. Rhoads, you wanted to know about heating oil, I did the math for you. A whopping 1,100 contracts going up this week. So if you want to sink our teeth into 1,100 contracts, I suppose we could do so. Not much to parse, though.
I'm fine moving on past that.
All right, so let's keep rolling to the world of nat gas. Listeners, we're going to stay in energy. We're going to pop out of crude oil in the product family, go down 2 slots to nat gas, and we're going to hang out there. Let's see what kind of week we had from a volume perspective out there. Nat gas, our number one dark side mover, off 5.5%. And you know what? A pretty active week, closing in on 500,000 contracts. Usually we expect similar volume levels to what we're seeing out there in WTI, somewhere around 440, 450. Looking a little bit more robust. Obviously, we've seen it explode north of that, north of 1 million contracts. Not so much this week, but getting halfway there, about 500,000 contracts. That is certainly respectable. Nat gas, after Carly coming on, talking about her upside about a month ago, those worked out pretty well, those SEP 3s. Hopefully you got in on that. She actually said on the show last week she thought more of the near-term move would be back to the downside, and that's pretty much what we're seeing, back to 260 right now, off about a dime in nat gas. She also said if you had some of that upside, some of those 3s, you should have gotten out of it by then, if not definitely by showtime last week. So hopefully you did, because not looking as good right now. She wasn't as enthusiastic, though, about loading up on, let's say, a 2.5 put, which is understandable. It's much more compelling for people to think about a 3 call on all the unlimited upside than a 2.5 put with your very limited downside. Doesn't really have the magic to move men's souls at the end of the day, listeners. So 260 right now, off about a dime, nearly 4%. If you go back to the end of the show last week, it's off about 5.5%. So intriguing stuff. Mr. Rhoads, what's catching your eye out there in the world of nat gas this week, sir?
A lot of put activity, huh? Which is, are we spread trading oil against nat gas right now? It looks different than CL, and I guess it probably should, because it's all turning red. But yeah, that's pretty much it. And it is kind of difficult for those of us that are normal option traders to get excited about a $2.50 strike, regardless of what could happen.
Yeah, it doesn't have the magic to stir the soul the way the 3 call does, right? Still getting some paper out there, closing on 500,000 contracts in nat gas. As Mr. Rhoads alluded to, quite a few puts going up. 43.6% of the paper today, nearly 500,000 contracts going up. In the SEP contract, that has 32 days to go. We're going to hang out there, listeners. And spoiler alert, the first one is a big put. Before we get there, the vol, like we said, going to be a little bit richer than what we just talked about in WTI, sub 30. Now we're looking at 55, off about 2 1/3 points. So that's still one of the richest vols we're going to talk about on the show this week by far. But still, it's a distant cry from what it used to be when we were threatening triple digits not too long ago out there in good old nat gas, listeners. So 55, still robust compared to VIX and a lot of the other products we're going to talk about, but again, coming off quite a bit from its heyday, threatening triple digits not too long ago. Put-wise, or I should say skew-wise, it's all about the puts still. 2.6% bid are the puts. A week ago, this week, 1.8% bid, so coming in a little bit, still a little bit rich. The call is kind of flat last week, kind of flat this week as well. Not a heck of a lot of evolution on the call side, so kind of speaking, I think, to what Carly was saying on the show last week, not a lot of interest or love for the upside right now. It seems like all the action, such as that is to the downside. That is also held up by the activity we're seeing here. The 2 1/4 puts in September are leading the dance by a country mile. 32,566 of those bad boys going up. Pretty much all week long, opening all week long. So folks piling into those. The big day today, 12,400 today, almost 10,000 yesterday, 6,500 on Tuesday, 4,000 on Monday, opening all week long. So again, just a lot of people piling in to those 2 1/4 puts, which is one of the reasons why that put skew still a little bid. Right behind it, though, we do have some call action. Looks like some folks may be taking Carly's advice. The 3 calls trading in September. It's like some folks dumping them earlier in the week. So maybe they heard the show. They got the hell out of Dodge. Then there was some opening paper later on in the week. So total of 23,500. The big day again today. So today a big action-packed day for nat gas options. 7,500 today, 6,000 yesterday, 6,800 on Tuesday, 3,000 on Monday. Only closing on Monday, then opening the rest of the week. You know, looking at the skew, it swung from 0.3% bid to 0.5% cheap. So probably some overwriting going on, just given everything we're seeing out there. I have a hard time seeing a ton of people pouring in to buy the SEP 3s right now. But hey, crazier things have happened. And right behind it, how about the 2 puts? 2 1/4 puts, not out of the money enough for you. Listen, you want to get a little bit farther out of the money? Allow me to present the SEP 2 puts, 23,000 of those. Again, 11,000 today, 8,000 yesterday, 2,200 on Monday, about 2,000 on Tuesday. Again, opening all week long. So folks just piling into those. It's like you might have a bit of a 2.5, 2 vertical going up today on the put side because 10,600 of the 2.5 puts traded today. The total volume for each on the strike for the week is pretty similar. Almost 23,000 of the 2 puts, about 22,000 of the 2.5 puts. But today they line up almost exactly. The rest of the week, not so much. But interesting stuff out there. 2.5 puts, 2 puts, and 2 1/4 puts. Kind of leading the dance with the 3 calls kind of slotting in there as well. Let's look a little bit farther out. Let's go out to the 2 puts here in November. They did about 15,000 contracts. Almost all of that on Monday. 9,300 on Monday, mostly opening. And then closing the rest of the week. So maybe they scooped some and then unloaded them the rest of the week. Either way, interesting paper there. If you go a little bit farther out, we keep talking about these strips, Russell, that have been going up out here every week. I think it was the 6 calls. Last for a while there, it was 1 3/4 and 2 1.5 put strips that were going up. Now they've switched to the call side. And if you look all the way out from, looks like pretty much April down all the way to the end of the year, it's the 7 calls going up for around 1,775. Let's see, they traded 1,000 today, 750 on Wednesday, and 25 on Monday. All opening there. So interesting stuff. I don't know, Mr. Rhoads, is that you out there gobbling up 7 call strips throughout all of next year in nat gas, sir?
My goodness gracious. I hope that doesn't happen. That's one of those, well, we think maybe next spring when the fighting commences again, things will get really ugly over in Europe or something like that. That's targeting, something beyond just natural supply demand boost in the price.
Yeah, somebody has this interesting agenda in here. Yeah. They've been doing it every week since the beginning of the year that I can recall, maybe even earlier. It was a lot of puts, but they're doing monthly strips like this. They swung to the calls now, doing a ton of paper every week like clockwork. It's interesting. A little bit maybe indiscriminate. They're just taking all.
Yeah, and that concerns me. And maybe it concerns me a bit because this week in the derivatives class I teach at Kelley, we're talking about being on the wrong side of the market and being on the wrong side of the market when liquidity dries up on you. And this might be an example that I use to talk about when we have our little extra session on Saturday. I might talk about this one as if these guys are wrong on this trade and as you put it, being very indiscriminate, that, they better hope they're right. We'll put it that way, because we talk about some financial disasters in the past, like the Amaret thing, and then I show how liquidity goes away when you load up on a position and you get caught on the wrong side of the position. Of course, we have no clue, this guy, what this represents relative to anything else that this entity has going on, but it's still a pretty darn big trade for anybody, any size person.
Now, speaking of big trades and things maybe not getting it right at first blush, equity markets falling out of bed right now after a nice rally, or they pretty much have swung 1% from the upside today. We got a question about the communication sector coming into the live chat as well, and we got Dr. Vix on, so I think we got to do a little bit of equities next.
In It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, pop on out of the energy and then get on into the equity indexes. Usually we hang out in U.S. Index E-mini, and we will do that. If you do want to see it, we have a question coming in here about the different E-mini sectors I was talking about earlier and Russell was talking about. You can find these in the TWIFO report as well. Obviously, no options to speak of, but you can look at some of the action on the futures. The communications sector is all the way down at the bottom. But Mr. Rhoads, who are you and what have you done to the market today? What the hell?
I don't know. And I despise people that take victory laps. And I was already prepared to do this even though I was wrong, and now I'm right. But over the weekend, I pointed out that both VIX and the S&P 500 were trending higher together, and I was like, whenever that's happened before, it's ended very badly. And this morning, we actually early this morning, VIX broke the previous closing low of this year, and I was like, oh, I'm dead wrong on that thing. And I was still going to talk about it. And I was going to talk about the decisions that you make when you're wrong. And lo and behold, now the whole S&P 500 has flipped around. And it looks like that signal's kind of still holding up. But what I'm talking about is when VIX and the S&P 500, when they trend in the same direction, that typically has happened before some of the bigger events, such as Volmageddon. It happened for about 5 or 6 weeks leading up to Volmageddon. Last year, and or not last year, like 4 or 5 years ago. And that same, I saw where VIX had trended higher since it hit a low this year on June 22nd, and it's been trending higher in sync with the S&P 500 trending higher as of this. This was as of last Friday, and I just tweeted it and tagged TWIFO and option and your Twitter handle as well and put that out on Twitter. But I was going to talk about a chart that didn't work, and now I'm talking about a chart that looks like it might be working a bit.
This is one of those days we always say, be judicious with this 0-day premium you're slinging. Today is a good example. Huge whipsaw out there as well. Up half a point over 4,600, now down 60 handles from that, 45.40. My goodness, man. It was just starting to turn on the option block, and we had a Henry on there. He said, it looks like something was coming out of Japan that was starting to spook the markets here. We're getting, it used to be like on the floor of the SIBO back in the day. You used to hear the rumble come out of the SPX, and you knew something was happening, no matter where you were on the floor, something was kicking, and then it would spread across the floor. You'd hear that wave. I guess this now Japan is the new SPX, Russell. Now you hear the rumors and the waves start there, and then it spreads throughout the rest of the market. We had updated the vol for the start of the show. Obviously, kind of throw that out the window. We were at 13.5, still down a quarter in VIX when we kicked off the show. Spoiler alert, we are higher now, listeners. VIX is up about a point on the day, about 14.20. So VIX can pop again. After the end of the last show, I looked at it. I actually picked up a nice little VIX call fly after all. I figured we might have a little bit of upside ahead of us. Threw that on, so we'll talk about that more on vol views, maybe oddities tomorrow, listeners. Looking pretty good so far. VVIX at about an 88 now. It was down an 83 when we kicked off option block, so already popping 5 points. I'm sure if I re-racked that now, it would be even more. Yeah, 91 again. So getting back almost 10 points from where it was this morning. So the vol getting frothy. Again, these are the moments you got to be judicious, listeners. Just slinging a bunch of 0-day premium like it's going out of style. Day like today, that could come back to bite you. Vol Q was at a 17, pretty much even when we kicked off the show. Let's see where it's hanging out now. 17 3/4. So it was down a point. Now it's only down about a quarter of a point from the show last week. So that puts that VIX to vol Q spread at about 3.65, so a little bit wider, about 0.15 wider than it was this time last week, but intriguing stuff. Mr. Rhoads, you are the once in future and now present Dr. VIX, after all. As we've been watching vol kind of erode, a lot of people, including myself, had kind of some vol erode trade on post-Fed. I scooped a few puts right after the announcement yesterday. They're looking pretty good for a little while, obviously not so much now. What are your thoughts on how vol has played out in the S&P leading into the Fed and now coming out of it, sir?
Well, I mean, leading into the Fed, and I probably, with what I wrote over the weekend about VIX holding up and not making a new low while the S&P is making new highs, probably should have had in the back of my mind that this was a Fed week. And I knew that because I wrote about it in the same article. And I thought it's funny, I published it and I was like, I might be wrong just because it's holding up until we get this last Fed announcement. And do we get a volatility dump after that? I could totally could have seen that one working out, but somehow it just seems to have reversed for us, and or for whatever call I had there, and volatility is topping 14 right now, but VIX it hadn't. Everybody's talking about how freaking low VIX was, and then I was like, well, what was the low this year? And just noticed that, VIX is at relatively low levels, but there's a slight uptrend there. And that slight uptrend is not something that you would expect. The S&P had made 7 new highs for 2023 since VIX made the 2023 low. And that divergence never holds up. It either breaks back down, which was this morning what I thought was happening. And actually, when it looked like that was happening, I turned my screen off for a couple hours. Give it a couple hours to right itself, and then came back to get on the show with you. And I'm thanking you and Henry from the bottom of my heart,
making you look like a genius.
We got 53 minutes left. God knows what can happen.
Yeah, this is one of those fun ones, listeners. Got some paper going up out there in the E-mini, as you might expect. 2.8, almost 2.9 million contracts on the tape right now. Sometimes parsing this paper out here, listeners, it's literally like spitting into a hurricane. There's so much going up out here. And again, you have to avoid the noise, like the 3840 puts expiring tomorrow going up 50,000 times, or the 38 quarter puts expiring in 4 days going up 50,000 times. If you could dodge the noise, finding the nuggets, listeners, it becomes a little bit more challenging and or intriguing. Like the 45.5 puts, I would say of the relevant strikes, that seems to be one of the more active ones this week. These are expiring, by the way, tomorrow. So 1 day to go, listeners. Almost 35,000 of those trading, pretty much opening all week long. The big day is today, though, 17,400 today. So if you're piling into some 45.5 puts right now, looking pretty good. If you're overwriting those, then look out below. You got 1 day to go. They 12,000 yesterday, 4,400 on Tuesday, and about 1,000 on Monday. But again, opening all week long. Right behind it, the 47.5 calls expiring tomorrow. My goodness, that seems perhaps a bit of a bridge too far in hindsight. 34,000 of those. The big day for those, 14,000. Someone opened 14,000 of those things on Monday. My goodness, 14,000 of the 47.5s expiring tomorrow, listeners. I hope for their sake they overrode those aggressively. 10,000 going up yesterday, mostly closing, so maybe they took a bunch of them off coming out of the Fed maybe, and then 7,800 today. So the open interest is only 7,000, so it looks like today's paper was all opening. Looks like maybe they opened them on Monday, they bailed on them on Wednesday, and then some folks opening some more today. Who's opening 8,047 halves with a day to go? Actually, looks like it might be a bit of a funky ratio. 46 halves going up 15,000 times today. So it's roughly 2-to-1. So it could be a little bit of fly action, even though the rest of the week, that paper, it doesn't line up at all. 10,000 on Tuesday, 5,000 yesterday, 2,500 on Monday. Folks were bailing on the 46 halves pretty much all week long. And then today's paper lines up pretty close to the OI, so they could be bailing again today. But yeah, weird stuff. 47 halves going up, have a day to go. If we hit 47 half, if even threaten it over the span of the next 24 hours, what kind of markets are we living in, listeners? And then let's see. Let's get beyond that really quickly. Let's look a little bit farther out. Let's go to the near-dated stuff that's going out in just a few minutes. 4,600 puts. They traded 24,000 times, almost all of that today, about 20,000 today, 4,000 yesterday, and not much going on the rest of the week. So, folks, if you piled into some 4,600 puts that are expiring in a few minutes, you're looking pretty good right now, listeners. So, you obviously listened to the option block and you said, you know what, this worm is turning, we're getting the hell in there. Also worth noting, the 45-35 puts expiring again in a few minutes. 18,500 of those trading today, total of 20,000 on the week. So, 45-35. Yeah, so we actually are threatening that level here. So Intriguing stuff afoot. Mr. Rhoads, anything catching your eye out here in this tsunami of e-mini paper?
No, it looks like somebody sold some 47.5 out of the money call, so maybe they're feeling good about that.
That's what I would hope. I would hope you're not buying those.
I'm gonna, for full disclosure, what's going on the other end of the line right now? I bought myself a Bloomberg, and I'm trying to finagle around the Bloomberg as we talk about these markets, and I've never really used it for options on futures. So if it sounds like I'm a little confused, and we know that I was confused for other reasons in the past, I'm still trying to get a handle on looking for block trades. Like you say, you said something looked like it was a ratio spread or whatever. I'm like trying to check that, and I can't figure out how to check that. And then I should just look at the CME Group TWIFO page and not try to be clever over here.
Look at you slinging the Bloomberg terminal. The big bucks over there now for Bloomberg, so they don't give those away.
They do not give those away, and they not even to college professors.
Yeah, you don't get it. Hopefully, you get a discounted rate at least, sir.
They don't discount anything. We'll just leave it at that.
Don't they know who they're talking to? The once future and now present Dr. Vix. Intriguing stuff. Speaking of intriguing stuff, we got a question coming into the live chat here from Option Guide. He wants to know, tell us more about the communication sector, Russell. So he's intrigued by that. He wants to know what you can tell him about it, because obviously you're intrigued by it as well, sir.
Well, okay. And we're going to talk about little ETFs here, because that's where these sectors actually emanate from. The Spider folks who do the SPY ETF, they also have 11 industry ones. And I've used those industry ones. I used them in my dissertation. I've used them for just tons of different analysis with respect to what's outperforming and what's underperforming. It's just the easiest way to go about doing that. And I was aware that there were sector futures over at CME Group, and I've looked at them every once in a while, but there hadn't been a whole lot of volume. And then I saw the communication sector went on the list today, and noticed that the open interest is a little over 4,000. And beyond that, I was kind of impressed that the bid-ask spread was only 15 cents when I checked it a little bit earlier. So I'm trying to find the full list of all of those funds. But there's an energy one. All of their tickers start with XL. It's like XLE for energy, et cetera. And I just use those for a very long time to get an idea as to what's going on with some sectors versus other sectors. I've spread traded the ETFs against each other when I think it's time for energy to take a pause, and maybe and healthcare is going to do some catching up, et cetera. And if we're starting to see the liquidity in those at CME Group, that's a better short-term. In my mind, futures are a better short-term trading vehicle than the ETFs, like the micro E-mini S&P futures. I haven't traded a spider since those things have become available. I just the size is palatable. You can scale up and scale down with those, and having the same thing with the sector, the spider sectors, I might be having a behavior change there where I don't use the ETFs or the options on the ETFs and just use the futures going forward. So that's what I got all excited about.
If you are curious, listeners, you can find these in the TWIFO report to see what they are. There's no real options volume yet, but if you're wondering how many there are, there's consumer discretionary, consumer staples, energy sector, financial sector, healthcare, industrial, materials, real estate, technology, utilities, and today's star, communications. So you have quite a few to choose from. I was just parsing through some of them as Mr. Once a Future Dr. Vix was talking. Obviously, some of the other ones like energy going to be a little bit more volume heavy. The OI and energy, 24,000. The volume today, 605. Going out to today's winner, the consumer sector, the OI is only 4,100. The volume today, 20. So as you can see, still a little light, not enough to really get the options going out there. But they're growing. They're starting to make it on our list more often. So if you are intrigued by this, Options God sounds like you are, and anybody else, they are available to look at least, and from a volume, we can look at some of the term structure and things in the TWIFO report, and then you can kind of dig into your broker's platform or the CME platform, some more info on them. Hopefully, if they keep picking up then perhaps we shall see some options paper out there. Speaking of paper, we did see quite a bit of paper out there in the metals. I think we'll head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the shiny stuff. To find it, listeners, pop out of the equity indexes. You're going to go down 3 slots to metals. Then we're going to hang out in precious for probably the remaining time of the show here, listeners. We have, of course, silver coming in at number 4 off 2.65%. Platinum at number 5 off 2.05%. Palladium at number 3 off a little over 4%. A pretty decent banger week for silver, nearly 50,000 contracts on the tape. Before you ask about some of the others, listeners, we have talked about them in the past. They don't really do a ton of paper. For example, Palladium right now, a whopping 46 contracts. And the other P precious name, so that 5 times fast, Platinum, 533 contracts. So again, not a ton to sink our teeth into there. And then, of course, you want to talk the big dog in the metals sector. It is indeed gold. Coming off a Fed week, you expect those to be a kind of a banger. Actually looking kind of light, 169,000 contracts for gold. That's not nothing, but we've seen it well north of 200,000 in the past around Fed weeks. So maybe kind of quiet for gold. Silver picking up the slack, though. Mr. Rhoads, what's catching your eye in the shiny stuff in the Fed week, sir?
It's that 2,000 level in gold. That's what gets the people on CNBC's attention, and we can't get past that. We were above it this morning, and now we're below it. And I'm looking at the December contract. I know. I don't know if that's what my Bloomberg defaulted to. And right in line, it looks like right in line with the equity markets. It's done the same sort of drop. Am I seeing that correctly? I am seing that.
Yeah,
correctly.
We are selling off
earlier today.
We are selling off now. Yeah.
Yeah, it's maybe it preceded that drop, but it looks like I see the 2,000 calls being the most active in the nearest dated one. I don't know if that's people selling because they think it's not going to get over it, or maybe hopefully some people were able to take some profits as it popped above 2,000 and then came right back down over the past couple of days. Or past, not even couple of days. I'm looking at a 24-hour chart. So really just today, finally kind of gave up all the gains that it looked like it was putting up. Maybe some people thought that the Fed was going to say that inflation is worse than it is or something. I don't know what surprise anybody expected out of the Fed yesterday. He never surprised. He does. I read a lot about Powell recently, and he's never going to do anything. He's not throwing any curveballs, man. He's going to tell you exactly what they're thinking about doing. He's fully transparent. He doesn't do like Greenspan and confuse the hell out of you. And I think it drives people nuts because you don't ever get to prove that you were smarter than the Fed, because you can't do anything smarter than somebody that's 100% transparent with you. I had a student ask me, do you think they'll surprise and do 50 basis points? Why would you do that?
For fodder, for questions like that.
Powell is not going to surprise anybody. I guarantee that man has never been able to plan a surprise birthday party in his life.
It's kind of a job requirement for the Fed, right? To not surprise people, to be as boring as humanly possible.
Yeah. Well, that's what we get when we don't have an academic economist in charge of the Fed. They actually are straightforward with us and tell us exactly what's going on, which is boring, but not so bad.
Academics. We could spend a lot of time. Who would want to talk to an academic? I mean, come on.
Nobody. I don't count as an academic.
Just the worst. You don't.
I'm atypical.
You moonlight as an academic.
I'm clinical, which means I'm half professional and half academic.
Half crazy person. Let's see what's going on out here in the shiny stuff. Even though it's not on our list, listeners, as Mr. Rhoads alluded to, gold and equities kind of moving in lockstep today. So you know what they say, Mr. Rhoads, when gold and equities move in lockstep, only good things can happen to the market, right? Only good things in the future for everyone when gold and equities.
Yeah, there you go.
That's an old adage, right? I mean, everyone knows that. It goes back to Dust Bowl days. Everyone knows that. Gold and equities moving in lockstep. Just get your dancing shoes on. Right now, yeah, gold well south of the 2,000 level. The big dog in gold this week, listeners, is actually in September, going out 32 days. By the way, I said about 170,000 contracts on the tape, so kind of light. About 38% of that paper going up in September. We're going to hang out there. What is the vol right now in gold? It was around a 10 handle not too long ago. It rallied a little bit north of 11 going into the Fed announcement, coming back off again this week about a quarter of a point. Still, no one's looking to gold for volatility right now. 10.9 is the SEP vol. So you think VIX is light? Allow me to present gold vol for you. In terms of skew, it's most of the bid is going to be to the calls. You know the deal in precious metals by now. That was the case last week, 2.7% rich. The calls are kind of flat, or the puts are kind of flat, I should say. This week, the call is still a little rich, 3.4% bid. The puts 1.8% cheap. So even though we're selling off, nobody wanted any puts this week, which is kind of interesting. And the big dog this week, listeners, the 2075 calls in September, going up nearly 8,000 times. Most of that yesterday, 5,600 times yesterday, 2,000 today, not much the rest of the week. So 2075 call. Looks like there might be maybe a 2,000, 20 half, 2075. It's not quite a fly. It doesn't line up. It's going up. Looks like it's going up maybe 1-to-1 today, about 2,500 times or close to it. Yesterday it went up 2,777 times on the 20 halves, 5,600 times on the 2075s, and 1,200 times on the 2,000. So maybe they were rolling into a 20 half, 2075 ratio. I don't know. The numbers don't make any sense, listeners, but they are lining up 2075s, 20 halves, and 2,000s in September were all our most active contracts. 7,800, 6,000, and 5,000 respectively. So that's kind of where all the action is going up in September right now. Behind that, we have the 22 halves. So if you want to kind of split the uprights, get a little bit farther out, those went up 4,720 times today, the 22 halves. That's pretty much all the paper for the week. And there's not much O either. So that's opening on the 22 halves as well. So weird upside paper going up for a decent size in September gold, which again, it's gold, so we kind of expect some longer term upside weirdness, but that one has a unique flavor to it. Allow me to present also, speaking of unique flavors, how about the June 3500s? They traded 1,100 times this week. Looks like it might be a 1x2 there as well. The 27 half 3,500 June 1x2 trading, opening for both legs on Monday. 27 half 3,500. Some of the upside things they do here in gold, they just boggle the mind out here. 21 quarter calls, a lot of calls going up here. And near dated, we have the 2,000 calls expiring in about a day. They traded about 2,400 times this week. Again, that was kind of a psychologically important level this week. Fed week, expect some action there. 700 on Monday, 700 on Tuesday, 600 yesterday, kind of bailing on some of them. Only a couple of hundred today. Hopefully some folks got the hell out of Dodge on those before this move, if they were picking them up earlier in the week. And since silver is actually on our list, let's go out there really quickly as well. Mr. Rhoads, it's been an intriguing week, intriguing year so far for silver. It was kind of languishing, then it had a pretty aggressive run up there. Given some of that back this week, off about 2.65%. When you're not paying attention to the big dog gold, are you watching a little silver? Anything catching your eye out there, sir?
Oh yeah, I've always enjoyed trading silver because sometimes it kind of lags what's going on with gold, and gold starts to make a move and silver just sits around there, is just sitting around thinking about it. Eventually, it'll start to play some sort of a catch up with it. So I have put on vertical spreads if silver's near support and gold's going in the other direction. But I've typically done it with the ETFs. I know I'm not supposed to say. I've said ETF too many times on this program today.
I don't know what those letters even mean, sir. What are you talking about?
Yeah, I'm not supposed to talk about that. But so that's how I have traded silver in the past. It's just a matter of if it seems to be lagging gold or the relationship between the two spreads out too much. Because silver is a market that not a lot of people look at. I like to trade a handful of things that the crowd's not paying attention to. So I have done that in the past. I don't have anything right now, and it's been a little while since I did that. I did want to mention, some of the pretty much every call trade that you mentioned with a 2,000 handle was a bullish trade. I was kind of going through the block trade monitor while you were talking about those different things.
The gold bugs won't give up.
Yeah, the 2075 September, that was a bull call spread.
Okay.
That was it. They bought the 2050 and sold the 2075. So that was the only one that they had sold.
Can't stop the gold bugs. They want it.
Yeah. No, it's all bullish paper on all of those different on all the different volume that you pointed out. Doesn't necessarily have to be, but it is this week.
Hey, when it comes to gold, it usually is when you get to that far upside stuff. Intriguing stuff here. And yeah, we joke. We like GLD and SLV here. A lot of people ask their preferred vector for some of these because it's easy. They hold the physical. You don't have all the issues with roll yield that you have with a bunch of other ETFs that try to replicate those. So certainly makes sense why some folks would dip their toes out there. Speaking of dipping, you're dipping into a little bit lower silver this week, 24 and about a quarter in that front future, listeners. How much paper on the tape? About 50,000 contracts, so a pretty decent week out here this week. What's the vol in silver? About 22.40, off about a third of a point, so decently frothy, double what we're seeing in gold, a decent premium over what we're seeing even in equity vol. So a little bit of juice to be found out here in silver, which makes sense. It has been moving a wee bit of late. Let's see. Skew-wise, last week in September, the calls were 4.2% bid, and the puts were 1.4% cheap. This week, we have just extended both of those. The calls nearly 5% rich, the puts 2.5% cheap. So nobody wants the puts. Everybody's loading up on the calls. See how that trade's working out so far. Right now, the 27 calls in September are leading the dance. Once again, September upside leading the dance, kind of like what we saw in gold. 7,600 of these bad boys going up this week. Looks like maybe they wised up on these a little bit, though, because they opened nearly 4,000 of them on Tuesday, and then they closed about 3,000 of them on Wednesday. So maybe they got the hell out of Dodge. They took a flyer heading into the Fed and got the hell out of Dodge. Either way, 7,600 going up this week, about 1,000 today. Not much going up on Monday. The 28 calls doing 6,000 contracts this week. They were a little bit more evenly spread out. 2,000 on Tuesday, 2,500 on Wednesday, 1,500 today. Looks like opening throughout most of the week there. So intriguing paper there. And right behind it, we have the 26 calls doing about 4,000 contracts. 2,000 on Tuesday, about 1,400 today. The rest kind of scattered throughout the week. Looks like mostly opening on. So a lot of opening paper on Tuesday heading into the Fed, which is kind of to be expected, I think. And then a lot of other fun stuff unraveling throughout the week. All right, listeners. Man, an interesting sojourn through the world of futures options this week. Last week, we got PTSD and the ags. It was pretty much all ags all the time. This week, the metals and the equities and indeed energy said, don't forget about us. You got actually some whipsaws and some whiplash in both energy and in equities today. Equities, aggressive whiplash action out there. So, Mr. Rhoads, I hope your neck is okay after this very whiplashy episode of TWIFO, sir.
I'm doing quite fine. I have survived. I probably you probably wouldn't hear the joy in my voice if it had been the exact opposite, where we were selling off. I was getting ready to take a victory lap on my little VIX and S&P 500 going in the same direction, and then it reversed on me to the upside. You probably would have had a hard time getting a word out of me.
There we go. I'm glad it did not come to pass.
I gotta emotionally separate myself from all this.
All right, Mr. Rhoads. If folks want to check out what you got cooking throughout the week, maybe give you some stuff to work on to put that Bloomberg to work.
Oh, yeah.
Where should they go? What should they do?
Totally wide open on that one. The best place is I have a Substack. It's russellrhoads.substack.com, and I just write things up every weekend. And during the week when things are going on, I might throw something out there. I've been throwing some things out with all the earnings that have been going on. But I'm also expanding what I cover to a few more macro markets as the summer goes along. So I'm going beyond just S&P, VIX, and stocks. Commodities are getting commodities and options on commodities are starting to be part of my repertoire on the Substack.
There you go. You got to pay for that Bloomberg somehow, sir.
I do, or at least make it worthwhile. So.
There you go, listeners. Follow him on Twitter at Russell Rhoads, all one word. Check out his Substack as well. Send him your queries. Give him stuff to research on his brand spanking new Bloomberg terminal over there. And, of course, you know where to go. Check out these reports and a whole bunch more. CMEgroup.com. You can begin your journey at /TWIFO. Where you go from there, it's up to you. But intriguing stuff. Back speaking of intriguing stuff, I had a good chat the other day with Mr. Nick Howard, the creator of all these reports over there. You check him out, bantix.com, BANTIX.com, if you want to go get the premium version of TWIFO. But they are cooking up some really cool stuff, not just limited to futures options anymore. So if you've been saying to yourself, man, I'd love to see some of these tools expand to other markets, you might be in luck. So intriguing stuff coming down the pike from those folks as well. Unfortunately, no more intriguing stuff coming from us today. That is going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern on Volatility Views. We'll be joined by Mr. Scott Nations there. Then after that, for all you pro folks, coming back with Options Oddities. Got some trades to talk about this week, so it should be kind of fun. If you want to check out that show, if you don't want your broadcast week to end with Volatility Views, only one place to go, theoptionsinsider.com/pro. to learn more. Then we're back again next week, all the way to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.